If business activity in the United States maintains momentum, the Federal Reserve could make 3 rate cuts this year, according to U.S. investment bank Citigroup. However, further labor market softening could shift this forecast to more dovish. That's up to 4 or even 5 rate cuts by the end of 2024 could be in the cards. Therefore, the non-farm payrolls for March could increase the odds that the U.S. Central Bank will begin monetary easing in June. The start of the new trading week, new months, and the second quarter was uneven across the markets, while the U.S. was still sleeping and Europe continued to celebrate Easter. Asian markets were stormy on Monday. China published an index on a business activity in the manufacturing sector. The PMI reached a 13-month high in March, having increased to 51.1 points at the fastest pace since February last year. However, the Chinese yuan weakened today under pressure from the US dollar, as well as amid a persistent crisis in the real estate sector. Infamous property developer Country Garden has delayed its annual report. China Vanke, at one time the largest public developer, reported record losses. While Beijing balances between economic recovery and the falling housing sector, Japan's monetary authorities are trying to save the sinking yuan. Moreover, its sharp weakening is considered unusual by the government. In addition, the sentiment index among large producers published today showed a drop from a plus 13 to plus 11 points for the first time in a year. At the same time, Japan's top financial officials insist that the current state of the domestic economy is in no way consistent with the falling yen. Both Deputy Finance Minister Masato Kanda and Finance Minister Shinichi Suzuki are on the same page. At the same time, the latter said today that there have been some speculative movements in the currency market, and we will closely monitor developments in the forex market and will respond accordingly to exaggerated price swings, without excluding any options, the policymaker warned. Importantly, the financial year in Japan ended on March 31, and this means that the country's central bank doesn't have to worry about the impact of a volatile yen on its balance sheets. It seems that the U.S. Central Bank has no reason to worry either. Reports on consumer spending looked at the growth in a year, so robust consumer activity confirms the resilience of the U.S. economy to high interest rates. It also seems that the Federal Reserve Chairman was pleased with Friday's economic data. Speaking at a forum in San Francisco, Jerome Powell said that the latest U.S. inflation data is in line with the forecast and that there is no need to rush to cut rates. Governor Christopher Waller spoke in the same way. In addition, he believes that economic statistics favor rate cuts this year, or even the need to keep rates at the current levels longer than expected. On the back of a strong economy, U.S. stock markets also feel confident. Thus, the S&P 500 index ended the first quarter with a jump by more than 10%. And today the index also remained in the green zone, trading higher within the intraday corridor of 5,245 to 5,265 points. The US dollar index, which determines its value in relation to 6 major peers, also traded steadily in the early trading hours on a Monday. Moreover, the leading Asian currencies, the yen and the yuan, are taking the back seat due to the internal factors. On the other hand, the readiness to tolerate inflation well above 2% stated by the US regulator supports risky assets. Therefore, although the greenback was trading higher today, it moved cautiously upward along the intraday corridor of 104.40 to 104.70. As for the single European currency, we shouldn't expect much activity in the euro-dollar pair today. The long weekend is going on in Europe, so the market is likely to be flat. Besides, the completely empty macroeconomic calendar did not give American traders a reason to find market catalysts. However, given the scale of the dollar's rise over the past few days, the market was clearly in favor of a rebound, at least local. In fact, it came through just before the start of the American session. Most likely, the European currency declined amid the fall of the pound sterling. At the same time, the euro-dollar pair broke through the support of 1.0770 and continued to trade down in the corridor between 1.0740 and 1.0800. If the bearish sentiment persists among market participants, the euro risks testing the critical level of 1.0700. In an alternative scenario, the currency pair will continue to trade at around the level of 1.0800. Compared to the stubborn trading on the currency market, the volatility over oil prices looks high, but this is only at the first glance. After all, by and large, in percentage terms, the difference between intraday highs and lows is modest. In fact, no changes occur. This is also due to the long weekend in Europe. That's tomorrow too. The commodity market will mainly trade sideways. Brent futures contracts are seeing increased interest from buyers today as investors eagerly await the outcome of the OPEC Plus meeting this week. Brent crude futures settled above $87 a barrel on a Monday, reaching the highest level in 4 weeks. As a result, the Brent price closed the recent downward gap. That's the difference between the previous closing and the new opening of the asset. At the same time, Brent crude again came close to local highs at $87.50. If crude stabilizes above this resistance line at the end of the day, an upward move is possible, and alternative scenarios suggest it will be possible, as before, to consider the possibility of the intraday corridor between 85 and $87.50 per barrel. So, you have watched the market review by InstaForex analyst for Monday, April 1st. Subscribe to InstaForex TV channel and we keep you updated on all market developments. Feel free to ask any questions and leave your comments. So, see you online tomorrow.